Hello everyone, my name's Gilly Challoner. I work for Jersey Overseas Aid. Welcome to our session Beyond Savings. Globally, it's estimated that more than 50 million people are members of savings groups or village savings and loans associations, which you might hear our panelists referring to as VSLAs today. The majority of those people are women in Africa. These groups are already a springboard for women and youth, but digitisation offers a leap forward, connecting them to formal finance, mobile money, and fintech tools. So the promise is enormous, but the path is not simple. Patchy network coverage, low trust, agent liquidity. And what I mean by that is when you are in rural areas, people rely on local agents to cash in or cash out of mobile money. But if that agent runs out of cash or digital balance, the whole system grinds to a halt. That's what we mean by agent liquidity. KYC hurdles, which may mean that you need formal ID to open an account. And for people without those documents, that can be a real obstacle to joining the financial system. And these types of things are everyday realities, and solving them requires all sides of the ecosystem. So grassroots implementers, youth mentors, microfinance institutions, banks, fintechs, regulators, and obviously the communities themselves. So I'm delighted today that we have with us some representatives who are living and breathing this work on a daily basis. So from the youth-focused international NGO, Restless Development, we welcome Martha Sifue in Zambia and Melinda Dumboya in Sierra Leone. From Finca Zambia, which is a microfinance institution building inclusive digital platforms, we welcome Chewe Konkola. And from Mcashbox, which is a fintech that was founded in Sierra Leone, we welcome Simon Level. And over the next 40 minutes, we'll hear stories from the front line and discuss the toughest barriers, the breakthroughs, and what's needed to unlock real scale and impact. And if anyone has any questions throughout the session, please feel free to post them in the live discussion, and we'll try and, if we've got time, come to those at the end. But without further ado, Melinda, I'd like to come to you first. Can you kick us off by telling us a story of how digitisation has affected the life of someone that you work with?
Okay, thank you so much, Gillian. So, as someone who has worked with the financial inclusion, it is an evidence that digitalization has significantly transformed opportunities for women and young people in Sierra Leone. So, here is a story of a woman by the name of Bendu Kamara. Bendu Kamara is a single mother living in an informal settlement in Freetown. So, before the implementation of the project, she managed all her money in cash and had never used mobile money or a bank account before. But through the Improving Financial Inclusion for Women Living in Informal Settlements project, a youth volunteer working with Restless Development visited her home, encouraged her to be part of the savings group, guided her step by step by using mobile money. The practice transaction together on her phone, and with that they opened an account, and with that Bendu was confident and felt confidence to have her own account for herself. So within a week, she opened a mobile money account and opened an account for the first time with a Sierra Leone commercial bank that we also partner with, and through her phone and even in her community. So the young leader helped her, and we see that digitalization gave her like the independency and security, and she can now pay her children's school fee directly from her phone and save part of her business income safely and access small loan when needed. So for Bendu, learning the management money digitally transform her day by day and also strengthen her family resilience, even help her to plan for uncertainty. So I would say digitalization tools aren't just convenient, they empower women to make individual decisions and build resilience in a certain time. Thank you.
Thank you, Melinda. And Marta, so you're in Zambia. How does Melinda's story compare to stories perhaps that you found at home? And how does the impact compare?
Great. Thank you so much, Gilly, for that. Melinda, that's a good story there from Sierra Leone. One thing I've picked from there is the confidence that the individuals had to work in a bank. Because sometimes even just access to infrastructure like banks sometimes is like a whole huge mountain to climb for some of our communities. Yeah, so that's a good impact right there. Because one of the things that resonates with that is that we have noticed that young women and youth have now increased openness to utilizing digital tools and platforms. For example, we had initial skepticisms. Whenever you talk about digital platforms, the first thing that the community will ask you is there are a lot of scams happening right now. How is our money going to be safe? So after a number of sensitizations, we've seen several groups have now started transitioning to utilizing savings platforms such as mobile money for those that have not yet transitioned to utilizing the digital platform. By and large, the introduction of a customized digital platform that we are piloting with our saving groups at the moment, the VSLAs, has boosted the confidence towards digital savings. Yeah, that's how it resonates with the Sierra Leone scenario. Thank you.
Thank you, Marta. That's very interesting point that you made about the importance of sensitizing the community members as well. So we've heard a little bit about the customers now. So I'd like to just switch over to the technology providers, Finca and Cashbox. Now, digital is often hailed as the future, but there can be negative consequences and outcomes from digitizations. So I was just interested if you could maybe tell me about your experience, about what makes this hard and how are you overcoming those difficulties. Perhaps, Simon, if I could come to you first.
Yeah, sure. Thank you, Julie. And so I'm going to actually start with a story about why digitization is so important and some of the challenges that people have when they're not digitized. And this actually relates to the founder of Cashbox, who's a guy called Sultan, who grew up in Sierra Leone, and his mum was in saving groups. And every cycle, every year, she'd complete a saving cycle and then she'd join a group that was saving more. And over a period of years, she accumulated quite a significant amount of money, was actually able to send Sultan to the US for college, which was a great outcome. But towards the end of his first year, his dad got sick and they needed money to pay for his healthcare. And so his mum, who had many, many years of consistent saving, never missing a contribution, went to the banks to try and get a loan to cover this cost so that they could cover her dad, her husband's healthcare, but also keep Sultan in college. She couldn't get a loan, couldn't get credit. No banks would recognize her history because it was all informal. And as a result, Sultan had to drop out of college and come back to Sierra Leone. And that really planted the seed for him of why digitizing saving groups and digitizing this informal activity was so important. But the point is that it's not just about automating a manual process. I think, I came on board with Cashbox about 4 years ago. I'm in the UK. I'm very used to, if there's anything I'm doing manually on my, doing manually, and there's an app that can digitize it for me, I just download the app and start using it. One thing I've learned is that in sub-Saharan Africa, where a lot of people have got phones with limited storage, where data is expensive, people are very judicious about what apps they actually download Most people have got fewer than 10 apps on their phone. And so just digitizing and automating a manual process isn't enough of a pull. There needs to be a pull beyond that. And it's really about the ability to build up a financial profile and then get access to other financial services like loans. And I think that's what we're finding, that we've got to be able to create that pull, that additional attraction beyond just digitizing.
Thanks, Simon. And Choe, from the thinker side, I'm getting a little bit of background noise, so maybe if you're not speaking, if you go on mute. But Choe, from the thinker side, just interested in your perspective about, the downsides of digitization and what you've seen and what your experience has been in Zambia.
Okay, thank you, Julie. So from the Finca Zambia perspective, I'd like to tap into what Simon has said, as well as Mata. I think for Mata, we're in the same environment. So we basically face the same kind of challenges in as far as digitizing savings groups is concerned. I think the challenges really border around transactional costs, because you have to understand that these groups traditionally were saving in a box. And so the value of their money remained the same when they put it in the box and when they took it out. And so now when you introduce digital accounts, whether it's a wallet, it's mobile money, or in our case, it's an entire platform where they will have an account with Finca for the individuals and for the group. So the fact that you would need to deposit and cash out, of course, cash is not free. So they tend to then face those costs to access their money. In addition to access points, in certain areas, it's okay. In urban areas, I think there's a lot of agents within short distances of each other. But in rural areas, you tend to find those challenges. And I think they're bordered around agent liquidity that you spoke about earlier, because you've got to understand that an agent, that's also a business for them. They want to generate some kind of income, and their income is very much tied to the number of transactions that they're able to do in a day or in a month. And so if they're in a rural space where there's limited clientele, of course, they're not going to have a lot of mileage in those kind of transactions, but also they're going to limit how much they invest into keeping money aside for these kind of transactions. And that speaks to the liquidity piece of it. So we see that. We also see a basic need for, devices. In certain cases, the clients or the customers that we're dealing with in these communities don't have a device. And despite the fact that our platform sits on a USSD platform, it's accessible using any kind of phone, the most basic phone. Some of them do not have that basic phone. And so when you're digitizing a group, you don't want to leave anyone out. And so you find those kind of challenges that we do encounter in the journey of digitizing the groups. Of course, there's a lot of benefits, but we do also have to discuss the challenges that come with that. So I'd say transaction costs, agent liquidity, devices, and some kind of literacy, digital literacy comes in here and there. But I think where we are today, there's been a lot of work done by multiple stakeholders on digital literacy and financial literacy itself. But we still do find pockets of communities that need a lot of help to ensure that you take everyone along with you on the journey and not leave anyone out. Thank you, Julie.
Thank you, Choe. So interesting hearing about the challenges, but also, it feels like that there's a mountain to climb. But I know that we're going to come to solutions and breakthroughs in a moment. But I was just interested in hearing you talk about all of those different challenges, the transaction fees. I mean, that's a big one for me. You don't want to be passing on costs to the end user to go digital. And the agent liquidity issues, mobile phone handset access, And interestingly, there was an earlier conversation where they were saying, well, most people have mobile phones, but actually we're in these communities that you guys are operating in and working in, that's not necessarily the case. And if there's time at the end, perhaps we can talk about that mobile phone ownership and how you've tackled that. Before we come to solutions and breakthroughs, Marta, any reflections that you want to make on the challenges that Cashbox and Finca have talked through there?
Thanks for that, Gilly. I could never agree less to what Chewe has just alluded to. I think in addition to gadgets or handsets being an issue for an average community member in the saving groups that we're serving, there is also, I think, a lot of inaccurate information on the safety of digital platforms. So there's really a need for intensified sensitizations in the communities. The other aspect that I would love to touch on is also, for some time, we have learned that there's been a lot of reluctance or hesitation in most financial institutions, like banks, for example, to invest in saving groups that are seemingly not willing to pay a certain minimum interest in terms of rates. So when it comes to borrowing externally, for example, as well as just formulating or tailoring products that resonate with the saving groups. So on the other hand of our interventions in Zambia, we are busy working with financial service providers to ensure that they can tailor products that speak to the needs of the communities. Yeah, I think that's what I wanted to add. Thank you, Gilly.
Thank you. So I think we're starting to move on to some of the solutions and the breakthroughs that are trying to overcome some of these challenges. So Melinda, we know that there's no silver bullet here and there's some real challenges. And I was just wondering, from your perspective, what do you see in Sierra Leone to overcome some of these challenges?
Please come again. I didn't get that.
So in Sierra Leone, can you just tell me what are the things that you are seeing, perhaps on the financial literacy side of things, or ways that you are trying to overcome some of these barriers and some of these challenges for people to access digital solutions?
Okay. Thank you so much, Gillian. Sorry, I didn't get that. I would say for us, one of the strategies or one of the things that was working really to tackle some of those challenges is the youth-led support that it has been the most effective approach that in Sierra Leone and of course as restless development. So by training young people in the community to coach those women and we create trust and understanding, we see how volunteers guide women how to open accounts and join savings group. So those young leaders are from the communities of those women. So let's take, for instance, for Bendu Kamara's story. So youth coaching helped her to confidently use digital payments for her school fee and business transaction. So we see that the peer-to-peer approach ensure that learning is kind of practical because it's they have those people in their community and they are trusted people, and they also have like cultural sensitivity, especially when it comes to them staying in the same community. So we see hundreds of women in those informal settlements are now navigating digital financial independence, even in community where, like we say, gender traditional restriction restricting women from getting involved or being inclusive in financial spaces. So I would say community-led mentorship is like the bridge that turn digital tools into something really empowering for women in those communities, in those informal communities, to be specific.
Thanks, Melinda. And Mata, in Zambia, is that a similar situation? So these kind of community-led systems where you're working along, where you have community members, youth-led mentors, working with women to help increase their adoption of digital payment platforms?
Yes, that's the case, actually. It's similar. Additionally, Melinda mentioned something in passing, which reminds me of one of the very key challenges, which is gender issues. There are a lot of gender underlying issues relating to financial inclusion, especially for young women. So in addition to the peer-to-peer or youth-led approach that Melinda was talking about, at the moment on the Olemero project, we are also implementing an activity that has to do with gender champions. So there are people that we call community-based champions. These are people that are picked from within the saving groups, preferably couples, so that they could be also those peer relations. So these gender champions are also doing sessions that relate to gender as well as household, family, finance handling in the communities. This is just to ensure that at the end of the day, after an individual or a young woman has saved her money in the home setup, the money utilization is in a good way, because in the past we learned of situations where a young woman, after having a share out from their village saving groups, brings the money home to the husband, then the husband gets the money and off he goes and has a few pints of wine, the money is gone. Yeah, so we've had a lot of those situations. So you can imagine somebody has to save for over a year, and the year's savings just vanish like that in thin air within a few minutes. So by utilizing gender champion sessions in the communities, as well as the peer-led sessions that my colleague Melinda spoke of, we have seen a lot of good stories coming from the communities, which are quite impactful. And yeah, I would say that the future for our communities in terms of financial inclusion for young women looks very bright and very promising.
Thank you. Now I'm going to move over to the demand side. So Simon first, then to Choe. So in your experience, you know, what Melinda and Marta have been talking about is that the importance of this kind of human interaction, the working together as a community to build that trust for these services. Now, from the supply side, what do you see as the ways in which you are tackling some of these big challenges? Simon, over to you first.
Yeah, I mean, I certainly think that community involvement and that hand-holding is critical. And, you know, we see, you know, we partner with organisations like Restless Development to make sure that there is that kind of community engagement. But if I'll just talk about one of the challenges that Choe raised, which is transaction costs. Because that, you know, that's a pretty big one. And there's a couple of ways that we're trying to address that. The first is that we've put in place a system whereby people's savings and excess liquidity they've got in the group that isn't being loaned out internally can be swept up into a master account that we hold with a bank that, because we're aggregating, pays a very high yield, and then we can pass that interest back on to the group members. And then the idea is that will more than offset the transaction costs that people incur from, for example, from the mobile money providers. So it's all about trying to find ways of not necessarily removing those transaction costs, but offsetting them. The other thing is that, you incur those transaction costs when you cash out, right? So what if you didn't need to cash out? So the other thing we're doing is building a marketplace in our app of other goods and services that people can directly buy without ever having to cash out. And so the money never leaves the system. And again, it's very much a partnership-based model, but it's trying to find ways of enabling people to do things with their money that are more productive than they could do if they weren't digitizing it.
Fantastic. I mean, that sounds very exciting. Choe, from Finca's perspective, is that similar to the ways in which you're tackling these transaction fees and other challenges that you're seeing?
Definitely. It's very similar in that the platform, for example, I'll speak about the platform that we have quickly just to bring this into perspective. The platform that we have, of which we require that a group would open a group account and individual accounts to which those accounts are linked to a group. We do not charge any transactional costs in between those accounts to transact between one another, to transfer funds. Of course, the transactional costs come in at cash out. We do offer other value-added services on our platform as well. The members are able to pay bills. They're able to do multiple other things, including access to mobile nano loans. But we do have to acknowledge the fact that in Zambia, we are still very much a cash-driven society, especially in the communities that we speak about. So cash out is still something that is very big here, that is not necessarily going away anytime soon. So other than trying to lower the cost of cash out for one particular institution, if the customers choose to move their funds across different financial service providers, of course, then they have to bear the cost of the cash out for that particular financial service provider. So cash out is still quite an issue. However, offsetting it is another way to look at it, like Simon says. We also do offer interest on these accounts based on the money that is sitting in there, to try and encourage these groups to save longer and not, perform cash in and cash out within a day, just to encourage that behavior to actually save rather than save to borrow. And so we are looking at multiple other ways to add value to the groups that are using our platform. But as a broader discussion, we do need to look at other ways that we can partner together, other institutions that are experts at managing groups. I think Restless Development is doing a great job in supporting women and youth in these communities. We've got technical institutions that can bring in the tech. And I think when we partner together, we tend to find better ways to address these challenges rather than face them head on ourselves. And I think even the landscape in general, the regulator has done a very good job at supporting initiatives that institutions are coming up with to, provide solutions to these communities. So we do have, like you said earlier, it's a mountain. There's quite a number of issues to address, but the key thing is, are we digitizing? Is there uptake? And is there room for growth? And I think so far it's a very positive trend. Yeah.
Thank you, Choe. I was thinking we've still got about 15 minutes left, so we're quite on time. So should we take one or two questions from the audience, and then we'll come back to the future and thinking about the bigger picture, what's needed to scale in a moment. So there's one here, which is around a study that was published a few years ago by CGAP that showed that the gender gap in usage of formal financial services starts during adolescence. And so I think this is a question to Melinda and Marta. But with your youth initiatives, are you seeing the gender gap closing, especially in adolescent girls? What's your experience? Who wants to go first? Marta, maybe I'll come to you first, and then Melinda.
Great. Thanks, Gilly. I'm happy to go first. So it's in some parts of Africa, and remember we are dealing with the rural parts of our context. In these rural areas, when you are talking adolescents, in some places, this is the age at which young people actually start getting married. Yeah, so you find youths that are young from the age of maybe even 15 in some communities are already couples. So it's true that these issues begin at the point of adolescence, and this is why the kind of saving groups or VSLAs that we are forming are various. So we have youth saving groups, which act as a space where conversations around gender norms and other issues to do with biases and beliefs that inhibit access to finances, especially for young women. We are so keen, I'm sure you've noticed where young women keeps coming up because these are the most affected by the issues that are happening around gender. So we are utilizing spaces as youth saving groups for conversations, reflective conversations. We are utilizing gender tools such as the 24-hour clock or 24-hour calendar, activity profiles that spark up conversations where people within the saving groups begin to rethink on their perspectives around household finances, household chores, who does what and who cannot do what, because all those are the underlying issues that are affecting access to financial inclusion, especially for young women. So very true, I agree, but we are utilizing those spaces positively. Yeah, I think that's what I've mentioned. Melinda?
Oh, Melinda, I think you might be on mute.
Okay, sorry, I was on mute. So just as what Martha said, I think especially working in the informal settlements, this is one of the greatest challenges. And our stressless development, our impact priorities had to focus on youth empowerment and how we see, just as Martha said, we have to engage and see how best we can make those challenges, mitigate those challenges. And as I mentioned earlier, the youth-led approach that we use, meaning using those volunteers and especially young people who live in the communities, who serves like an influence to the communities. They provide like one-on-one coaching session in the homes of the women, and we see teaching them step by step, and they also engage leaders and their husbands, the husbands of those women and other key stakeholders. And I can say from our last phase of implementation, one of the greatest change that I've seen is how as women and their husband have been engaged, we see how their children also opt to be part of those adolescents. They opt to be part of those groups, and we have quite a number of adolescents who were part of the savings group. So with that youth engagement, we can see that it's really creating the impact and the change and removing the gender norms that our communities, especially those informal communities, have. So we are really engaging those people through the youth-led approach.
Thank you, Melinda. Another question from the chat. I don't think we've got too much more time for questions before we wrap up, but another one, how are you tracking possible drop-off versus graduation to other savings beyond VSLAs? Simon, do you want to take that one?
Sure. And I know there was another question about, are VSLAs just seen as a stepping stone to something else, or are they the kind of the goal in itself? And I think those two things are interconnected. I think my view is that, a lot of VSLAs are formed as part of a particular project that's got funding for maybe 3 or 4 years. And then once that funding dries up, they're kind of left to their own devices, and some carry on, some don't. And so having something that creates sort of longer term sustainability, I think is critical. And I think that's tied up with enabling people to access other financial services. So, for example, our business model is very much dependent on third-party fees. We don't take a fee from the users directly. We will take a fee when people access some kind of financial service. We'll take a commission. Or when they buy a product through our marketplace, we'll take a commission on that. So we're heavily incentivized to make sure that we're continuing to deliver value, and that it's something that users want to access and make use of. And that also, you have to look at different saving models as well. So we also offer individual savings. So a lot of people, would be in a VSLA, but then on the side start an individual savings pot. And that might be what they carry on with after the program, that particular program they're part of, has stopped. So I think it's all about having commercially viable, sustainable business models, which is is hard to get going. So I think the role of grant funders like Jersey, Overseas Aid, in these markets, as catalytic funders to help kickstart things is really critical. But then the ultimate solution, I think, needs to be commercially viable.
Yeah, absolutely. Choe, did you want to come in on the VSLAs being seen as a stepping stone question as well?
Yes, I think just to add to what Simon has said, definitely they have to be seen as a stepping stone, because then that signifies a level of growth within that community. We cannot expect necessarily for them to remain within the group saving the same. So we do encourage growth, and when we see growth, like for instance, these groups would have their own accounts with us. And so you're able to look at the customer and score them and be able to offer them other services or other products. And that then empowers them to grow beyond their capacity within the savings group. So absolutely, these are seen as a stepping stone in a community. You go to them, you bring them in, you train them on financial literacy, digital literacy, you open up your services to them, and then you then support them in accessing those different other services that you're offering to them, and you help them to grow their capacity, whether it's in their business or in their savings or in whatever other activities that they are in as a group. And so this is I think it's a really good place for people in these communities to start from. They form a group and they support each other, and they keep that social norm going amongst each other, and then they get included into the formal financial ecosystem.
Yeah, thanks, Choe. We're running out of time, so I'm just going to come to you with a question each, and if you could just give us a key takeaway for the end of the session. But scaling from thousands to millions requires more than just a product. What one systemic shift, maybe it's regulation, maybe it's infrastructure or partnerships, do you think would really unlock scale in Zambia and Sierra Leone? Who wants to go first? Marta, I'm going to pick on you first.
Okay. Great. So from the conversations that we've had and some of the challenges, I would want to take it from this point of view. So lowering fees and simplifying certain processes such as account opening, I think will directly support, will be in direct support with Zambia's 8th National Development Plan by making financial services more affordable and accessible. So driving digital innovation and empowering women, youth, and rural communities for inclusive economic growth. So ideally, I think what I'm trying to say is if we are to, if the supply side is more willing to accommodate the fees that the demand side is willing to work with. Remember, Chewe also mentioned to say Zambia at the moment is not really digital, and this is why there is a bit of reluctantness in terms of just holding money in an account. Because even if somebody holds their money in the account, when they want to buy, the person they are buying from does not have the digital system that allows them to buy digitally, so they'll still need cash. Yeah, thanks.
Thanks, Mata. So it's those low transaction fees and simple services for the end user. So maybe I'll stay in Zambia and come to you, Chewe, next. What do you see as the shift that's needed to achieve the scale?
Definitely going to where the customer is or where the community is, like in terms of account opening, rather than asking them to go follow you to some branch somewhere. So it feels a bit of a burden to them to do that. So I'm happy to say that I think solutions are already on the ground. Finca Zambia does have digital field automation where we do open accounts in the field and we take care of all those KYC issues. So we reduce the back and forth that the customer will need before their account is fully opened and they have access to services. But certainly we do need to work on, as a community of financial service providers, the cost. Unfortunately, that's a broader conversation. Being that we're still a cash-driven society, especially in the rural areas, we do need to address the cost to cash. I think in terms of access, like network coverage, those things have been worked on to a great extent. So we do have agents being placed in the most rural areas at this point. So there's a lot of inclusion going on in there that, people can still go to an agent and transact. They can still access a mobile platform and transact. But the cash issue, I think, is still one of the critical areas that we need to address. Certainly, yeah.
Thank you. Melinda, over to you, Sierra Leone.
Yes, thank you so much. So in Sierra Leone, and since we are dealing with communities that are in informal settlement, I think I will emphasize on the need for policies and providing a platform that actually connects savings group directly to the bank and mobile money provider, which is already in those communities, but the emphasis on policies like combining with youth-led community training. So I think this will ensure that women can save and can borrow and can invest safely. So even in those informal settlements, so supporting women through those peer mentorship help them to overcome like those gender barriers that they are facing in their communities and help them to build financial resilience in their household. So by combining the systemic change and with trusted people and local guidance and digital financial inclusion, we can reach far beyond just a handful of communities, but it can transform how women also manage their money and as well strengthen their well-being across the country, not only in those in those informal settlements, but in the country as a whole.
Yeah. Thank you. Simon, you've got about 10 seconds.
Super fast. So like I said before, I think it needs commercially viable, sustainable solutions. So it needs private actors, but it needs a supportive environment. And in particular, the role of the central bank with fintechs can be very tricky. It's just taken us 10 months to get the simplest thing approved that should have taken 10 days. So getting the speed of action from the institutions as well, I think, is a big part of this.
Wonderful. Well, thank you so much to our speakers, Melinda, Marta, Chue, Simon, for sharing such honest, inspiring stories. I hope everyone's enjoyed that session. And I think what's come through so clearly is that digital tools can open incredible tools, but it's people, the mentors, the agents, the innovators, the communities who can really make it work. So thank you for this afternoon, and yes, enjoy the rest of your sessions.